What's up, guys, and welcome to MoonShot Money, where we're earning more, saving more, investing more, and giving much more. On this channel, we never tell you what to do to increase your wealth, but we do share with you what we're doing. We have subscribers and viewers who are interested in investments other than growth stocks. So today's video is looking at 4 dividend stocks that the MoonShot Money team absolutely love. If you start buying those income producing stocks when you're young, you'll never regret it. 4 stocks to put a little jingling in your pocket. Hang on till the end and I'll share a great starter pack of investments if you're just now getting started. How to invest your first $1,000 at the end of this video. I'm Chase and this is the MoonShot Money channel. Are you ready? Let's go. As always, we are not financial advisors, and this is not investing advice. Please do your own due diligence. We look at buying a dividend stock as buying income for the rest of our lives. New t-shirt or a stock that pays me a quarter every month forever. Sometimes I buy the shirt, I'm not going to lie, but more often than not, I'm buying income for life. We're going to give you 2 dividend picks from the health sector and 2 from the energy sector. The first dividend stock that we love is AbbVie, ticker ABBV. AbbVie has a dividend of 4.2% or $5.64 per share and has grown over 26% in the last 12 months. That's a tremendous 1-2 punch. AbbVie, the large cap global biopharmaceutical company, has outperformed many of its peers over 2021. AbbVie discovers, develops, and commercializes advanced therapies that have an impact on people's lives. Today, their passionate AbbVie team has approximately 48,000 employees working together to help patients around the world. We're not here to tell you everything there is to know about AbbVie. We're just telling you what we're buying. The second biopharmaceutical dividend company is Pfizer, ticker PFE. Pfizer has a dividend of 2.75%, which is pretty good, but it has been an outstanding year for Pfizer, growing over 48% in the last 12 months. Talk about a great company to own. We all know that Pfizer was one of the 3 to develop the vaccine, and that was part of the growth fuel, but they've also just been granted emergency authorization for their virus pill. The authorization introduces the first treatment for COVID-19 in the form of a pill that can be taken orally. This is the kind of company that we want to be invested in for the long haul. It took a great team to do what they did with the vaccine and now this oral treatment. Way to go, Pfizer. We could say a whole lot more, but we'll leave that to your curiosity and your own research. We own Pfizer and we are buying more. Help us out by pressing that like button down below. We really appreciate all the help you can give us. Also subscribe to our channel so you can see more videos like this one. Let us know down in the comments below what your favorite dividend stocks are. It's always fun to learn from you. Come on and share that knowledge with our community. Don't be shy. Our third stock is in the energy sector, and it's Chevron, ticker CVX. Chevron pays a very nice dividend of 4.45% and has coupled that with 43% growth over the last 12 months. Pretty snazzy. We are huge on Tesla and absolutely believe and know we are slowly moving away from internal combustion engines, but the key word is slowly. It's going to take many years to move away from fossil fuels. Oil is the fuel that runs America and the world and will be for decades. Chevron, one of the world's largest integrated energy companies, has exposure across the value chain from drilling to transportation to processing. That provides balance to its portfolio, since in normal markets some areas will usually be doing better than others. Chevron stands alone in financial strength. Take a look at their numbers. Chevron also has an over 3-decade-long streak of annual dividend increases under its belt at this point. We own Chevron and we are buying more. Okay, the fourth dividend stock and second in the energy sector is Enbridge, ticker ENB. Enbridge has a sizzling dividend of 6.79% and has seen its stock price rise over 20% in the last 12 months. Around 83% of Enbridge's revenue comes through oil and natural gas pipelines and 14% of their natural gas distribution business. Growing demand for energy from developing nations is likely to result in an increase in the demand for oil and gas over the next 20 years or so. Sure, oil and gas may shrink as a percentage of total pie as renewable green power options expand, but oil and gas are going to be in big demand. There's also an ongoing investment in clean energy with Enbridge too, for those who cringe at the thought of owning an oil and gas company. Now, I promised you a starter pack of investments for your first $1,000. Here you go. I'd put $500 into the Vanguard's S&P 500 ETF, VOO. That gives you instant diversification into the 500 largest companies. Next, I'd put $200 into Tesla because I believe that much in their future. Then I'd put $100 into Bitcoin and $100 into Ethereum. Both will continue to go up in the future. With the last 100, I'd invest in the metaverse. The Round Hill Metaverse ETF is the last $100 investment. That's how I'd invest my first $1,000 if I were starting today. Let me know in the comments what you think about my starter pack. Are you a dividend investor? Let us know. How would you invest your first $1,000? Remember, if you're not interested in your money, someone else is. Have a great day, everyone, and we'll see you on the moon.